Happy New Week, guys. Welcome to today's Trade Ideas and Signal. So, we'll be starting afresh this week because last week all our positions were traded against, were moved against. And for some reasons, we followed through on our strategy, and at the same time, we discovered that, okay, that some things are not right in the market or with our strategy. So whichever way, but nonetheless, that's the reason why it is always advisable to follow a proper risk management so that the profits we've made will not be given back to the market, and at the same time, our money, our accounts will be what will be secure. And last week we witnessed a lot of movement in the market, and at the same time, where we were anticipating, even though we our strategy marked it through for us to follow through on the something, but at the same time we see some movement in the market that did not follow through on our expectations, and thereby making us to at least lose uh some positions into the market. Like this particular level here, we have a trade coming down, and it give us a proper mitigation, and at the same time move appropriately in accordance, even give us a very volatile movement toward that direction. And we are anticipating to take profit below this low, but nonetheless we see price reverse on us, and at the same time take out our high, take out the level. And even though we are buying from this level and the something come back to do what to take out our position again, and at the same time price continue to move up, downward, and when we try to sell with the market again, we witness this massive reversal in the market. And for that reason we are anticipating another level from this particular leg, this movement, we are expecting, even though we were waiting for the closure of this candle below this low for us to be able to know and be able to capitalize on the fact that maybe price is willing to do what to continue to sell or buy. But we missed the trade coming from this level. It is not missed, I won't say missed, because we are still anticipating the level to we are still anticipating proper mitigation from that level, because we wouldn't have been able to sell had it been this I mean, we wouldn't have been able to buy had it been this high wasn't taken out of the market, because this is the validation level we are expecting for us to continue to buy with the market. So we are still on track, even though our previous week analysis did go the way we want, but did not almost all our trade give us 1 to 5. Almost all our trade give us 1 to 5, but we did not meet up with our. Let's assume we take out 1 to 1, 1 to 5, 1 to 2 from all our trades, we are in massive profit. But for the fact that we are anticipating 1 to 3 in the market is enough reason for us to, is the reason why we did not meet up, make any profit that last week, because we are anticipating 1 to 3, and that's the proper risk reward ratio that we can embark on. And mind you, if we have some little consistent profit now, like 3, if we win 3 in a row, we recover all our losses and everything. But nonetheless, we are expecting and anticipating the fact that, okay, this particular level, as we have traded above this high now, we can now be expecting to buy from, and this is the level we are trying to buy from. And another thing I want to point out is the fact that last week I was, not that I was introducing something new, but it is because of the fact that, okay, it serves as a confirmation that's okay. We can, this trade that we are taking is an higher probability trade, and that is 15 minutes validation. And I will be waiting on 15 minutes to be looking for setup on 15 minutes, and waiting on 4 hour for confirmation of that setup. In this essence, that will be anticipating a closure either above or below, what is it called, or below our anticipated level. So for that reason, during the weekend when I was trying to analyze and try to go through my previous week trade, how why the reason why we did not, even despite the fact that our trade were in place, and our trade were in place, our order were in place, risk management in place, strategy in place, everything. We tick every something. So what's the reason why we still kind of have that back-to-back losses in the market? Number one, we did not take partial profit here. We trade rigidly on with a 1 to 3 risk reward ratio. That's our number one ideology here. So that's the number one reason. Because almost all our trade give us nothing less than 1 to 5, or I mean 1.5, or risk reward ratio. But because we are anticipating 1 to 3, we did not take any partial profit, and we are expecting because we are playing numbers game. So that's the reason why we did not uh, have any profit, at least for now. Then another thing we notice in the market is the fact that, okay, anticipation of 4-hour closure for us to bank on our anticipated level on 15 minutes is invalid, in the sense that it is not an assurance for markets to do that, to follow through, because last week proved that point. And it was until yesterday that I was still looking at the market, that I was trying to kind of, like, everything ticked. What could have been? Then confirmation, what we are using for confirmation is not appropriate enough. It is not a confirmation. Let's just put it that way. Because the confirmation is not confirming anything for us now. Because after the confirmation, we still lose. The confirmation does not guarantee, us banking on our TP, our trade TP. And that is one thing that I observe during the weekend. And another thing, so we have to automatically remove the confirmation from our 3.0 strategy that we are using, because the strategy normally is the fact that, okay, we are trading institutional and classical structure trading, and normally this is our trade. This is what we are expecting in the market. Hmm? This is what we are anticipating and expecting in the market. A proper mitigation of this level, then we can now be expecting that from here we want to kind of anticipate price movement. A proper mitigation of this level, even though within this level we'll be anticipating some kind of, so this is our 4-hour level, this is our 4-hour structure, which is our classical structure in the market. But market does two things. It always do two things, which is number one, take liquidity, and at the same time rebalance and imbalance. Within this level, there are a lot of imbalances that will be there, but within this level, a liquidity will be generated and taken from this same level. So, and that's what we are expecting and anticipating in the market, that price is going to come into the market, generate a liquidity, which is this liquidity, take out the liquidity, give us a break of structure, create a shift for us, and at the same time continue to move. So this happens to be what we are expecting on 15 minutes, and this within this particular level on 4 hour. So if we have something like this in the market and we are expecting, so then time frame now comes in, because we have to be very careful with the way we trade or with our time frame. So what are we doing on 50 minutes? 50 minutes, this is what we are just looking for. We are only looking for breakout block on 50 minutes, and at the same time on 4 hour, we are just looking for our point of interest, levels that we are expecting price to react from. So support and resistances level on both daily and 4 hour. We pick out the open, high, low, close from monthly and weekly, because that's our institutional structure as well. Then we use our classical structure on both daily and 4 hour. Then we expect an institutional structure on lower time frame, because it includes manipulation. And manipulation is the taking of liquidity below the low and liquidity above the high. So this is what we are only expecting on 4 hour, and this is what we should be expecting ourselves to do on 15 minutes rather. on 50 minutes rather. So this is basically our anticipation on 50 minutes. And from our 3.0 strategy, normally our trading time frame is 4 hour. We are just an aggressive entry on 4 hour. We just want to enter conservatively on the entry on 50 minutes, and we are only anticipating a breaker block on 50 minutes, and that within the level, and that's what our strategy stated. But the introduction of waiting for 4 hour to close above our anticipated level on 50 minutes suggested that we are trying to trade from 50 minutes level. Hence, we are living, hence we have this particular. So during the weekend, when I studied the whole something, try to look back, try to see where we've gone wrong and everything, then I discovered the fact that okay, it was within this level that we've went wrong, in the sense that we are moving away from our strategy. Our strategy only states that we look for structures, we are trading structures and move with structure, we flow with the market with our structure. But now using 4 hours something, because that is not, let's assume we are trading structure from within this level. We could this is the level that would have been anticipating to buy from. This would have been the level that we want to buy from. We want to buy from within this level if we are trading. But because we look at this level on lower time frame, and we are anticipating the closure of 15 minutes, 4 hour above this level, and that's an indication for us to do what? To buy. And we bought from the level. And at the same time, we see how markets did manipulate us through. So let's assume here as well, this particular level, even though we would have potentially sell from this level too, within 4 hours, but our losses would have been minimized because we would have been anticipating something, a shift like this, a proper shift from within this particular level. This one did not give us that proper shift we are expecting. Even though it did give us the proper shift, we would have only lose this one trade, not this particular one that we lose here. So our losses would have actually been reduced. Let's assume we follow through and we use only structure to try to place our trades. So that being said, I'm reaching my 15 minutes target objective. So I don't want the video to be that much long. And at the same time, that is start about that. So that's what I've discovered. So the conclusion of the whole matter is for us to retrace our steps back to trading structure and use trading only on 4 hour. Our structural level on 4 hour, flowing with the market on 4 hour, trying to see. The only thing we use from monthly to weekly, we use that one for our open and low close institutional structure trading, and daily for our major structure, and 4 hour for minimized what is it called, 4 hour and daily work hand in hand, and they kind of like what is it called, major structure minus structure of the 4 hour, of the daily is 4 hour, then automatically we can pick our point of interest from what is it called, from 15 minutes, on 4 hour. The point of interest on daily will be reduced on 4 hours, so that at least at the same time we'll be able to trade properly. With a minimized point of interest of 4 hour, and that ends there. And once we are within our point of interest of 4 hour, we go on 15 minutes to look for breaker block to do what? To aggressive on 4 hour, conservative entry on 50 minutes. And that's all. And that would have saved us a lot of what is it called, from the market. So we just want to enter aggressively on 4 hour. And mind you, this trade still remain intact. So this is will still be our trade. This is our anticipated level. There is nothing more, nothing else for us to kind of like capitalize on, at least for now, except, and this is our established range, and as you can see, this is the level we are willing to do what, to buy from. So wherever something we are experiencing from this level, so far this high is not taken out before we come to this level, we can still be anticipating this particularly. So this will be all for now. Thank you very much. Have a lovely and a profitable day. Bless us all. Amen.